In essence, we've watched Saudi Arabia now be protected by two of the three largest nuclear arsenals on the planet. We've watched them join the BRICS New Development Bank and tell everyone in Davos that they are open to taking other currencies for oil. I have connected the dots for over 3 years saying this will happen. And it freaks me out how fast it is happening. But nothing like what I saw yesterday. And I will read the headline. UAE, the United Arab Emirates, officially stops using dollars for oil trades. Well, you see China and Saudi Arabia striking deals like this. It is just more and more of what I call logarithmic decay. Little by little, by little, by little, by little, by little, and bang, all at once. It's like taking an axe and chopping a big oak tree.
Financial expert Andy Schectman provides insights into these transformative economic developments in our latest episode, Unraveling the Implications and Opportunities Arising from This Evolving Landscape. In a paradigm-shifting move, Saudi Arabia and the United Arab Emirates are strategically distancing themselves from the U.S. dollar, aligning with the BRICS New Development Bank, and openly considering alternative currencies for oil trades. The UAE's groundbreaking decision to officially cease using the dollar for oil transactions, coupled with its entry into the BRICS consortium, marks a significant departure in global economic dynamics. This shift is part of broader alliances among nations, including the Shanghai Cooperation Organization, Eurasian Economic Union, and the Belt and Road Initiative, challenging the historical dominance of the U.S. dollar and fostering economic cooperation with trade agreements settled in local currencies. Now we'll show you clips of Andy Schectman discussing the matter, but first, subscribe and turn on the notifications bell so you don't miss out on new videos.
They just joined the BRICS too, by the way. They were formally admitted into the BRICS in August. The United Arab Emirates is eyeing potential oil and gas deals with up to 15 countries, including China, Russia, Egypt, all of whom are BRICS members and advocates of the continued de-dollarization. When you talk about a shot across the bow, this is as big as it gets. Now, the only thing that would be bigger than that is when this is followed up by Saudi Arabia and the remaining OPEC countries who say, yeah, look, you guys are going green. Thanks for the memories. We're going a different direction. When you put all of these groups together, the Shanghai Cooperation Organization, the Eurasian Economic Union, and by the way, the president of Belarus has just called a formal meeting that the Eurasian Economic Union and the Shanghai Cooperation Organization should join BRICS. I've been saying they're going to do that for 3 years. They're all the same countries. But now there's a formal meeting in the works for that to happen. But when you put them all together with the Belt Road, which in and of itself is 75% of human population, you're talking the majority of human population. You're talking almost 80% of all the global oil supply, 70+% of all the global natural gas supply, the majority of all the rare earth metals, the majority of all the precious metals. And it's a situation that is not ending. I'll take a few more pieces on this and we'll talk silver. China and Saudi Arabia just signed a very large, about an $8 billion swap agreement. A swap agreement basically says, well, we'll trade with each other in each other's currencies rather than what everyone has always done, and that is to first go into dollars. The high interest rates of the dollar, the cost of converting, and being in the SWIFT system, which we have seen already two of the BRICS members, Iran and Russia, be kicked out of SWIFT, have their assets frozen. These countries are doing it amongst one another at a better rate. You don't have to convert to dollars, and in a way that is very advantageous for these countries. And at the same time, they sidestep the SWIFT system. So when you
in a dynamic interplay of global energy and climate initiatives, the Biden administration has recently unveiled comprehensive regulations targeting methane emissions from the U.S. oil and gas industry. This significant move, announced at the United Nations COP28 climate change conference in Dubai, is part of a broader international commitment. Crafted over a 2-year period, these rules align with a 150-country pledge to reduce methane emissions by 30% from 2020 levels by the year 2030. Simultaneously, in the complex landscape of global oil dynamics, Saudi Arabia, as the leading exporter of crude oil, is contemplating a strategic shift. amidst a backdrop of falling oil prices and an uncertain market. An energy market veteran, Paul Sankey from Sankey Research, suggests that Saudi Arabia may opt to flood the market with additional oil supplies. This move, if implemented, would be a reversal of the production curbs the country has adhered to in recent times. The context for Saudi Arabia's potential shift lies in the aftermath of the latest OPEC Plus meeting, where member nations pledged voluntary production cuts without providing firm commitments. This led to a decline in oil prices, prompting Saudi Arabia to explore strategies to regain control over market prices. Paul Sankey estimates that Saudi Arabia has the capacity to ramp up its oil output by an additional 2.5 million barrels per day. Sankey draws parallels with Saudi Arabia's strategy in 2014, where the country surprised markets by deliberately flooding the market, causing crude prices to plummet from around $100 a barrel to $50. This drastic move had the intended consequence of driving higher cost producers out of the market as profitability dwindled. While currently Saudi Arabia is maintaining a cut of 1 million barrels per day into the first quarter, there is speculation about a potential shift in strategy to counter challenges posed by booming U.S. oil production. Indeed, the U.S. oil sector has experienced a surge in output this year, reaching a record high of over 13.2 million barrels a day in September, according to data from the Energy Information Administration. The dilemma posed by the burgeoning U.S. oil production remains a persistent concern for OPEC and Saudi Arabia, highlighting the intricate balance between global climate goals and the ongoing challenges in the energy market.
Russia just more or less has inked a deal with Turkey. Turkey was told by the European Union that, no, we don't want you in it. They applied again, and they don't expect to come into the European Union anytime soon. So Turkey more or less said, well, screw you, we're going to join the BRICS. They're also the third largest accumulator of gold this year in 2023. There's no coincidence there, but the deal that they're forging with Russia is establishing a plan for natural gas trading. And Russia wants Turkey to be the hub for all of Europe for natural gas. So this is all being done in local currencies again. So sidestepping the dollar, sidestepping the SWIFT system. Another big deal. You can see the alliances that are being made. Venezuela, in and of themselves, not too much to worry about, right? They do hold 17.5% of the known oil reserves globally. They have formally applied as a full-fledged member to BRICS, as has Pakistan, has fully applied to be a member of BRICS, as has Nigeria. Nigeria is an OPEC country. They're on the Belt Road. If Nigeria joins, along with all the countries that are already there, you are at 80% of the global oil supply and 73% of the natural gas reserves globally. This is nothing to shake a stick at. So I just want people to know that this narrative that I talk about of continued de-dollarization will massively impact all commodities. And as Zoltan Pozsar says, we have entered a period of time that is no longer going to be dominated by opaque debt instruments, but rather by transparency in commodities. And you can see these countries not only are doing this by massively accumulating all the world's commodities, not just gold and silver, but copper and rare earth metals and wheat and soybeans, and you name it. If it's a commodity, they're buying it. But at the same time, they're doing so outside the dollar. You look at a massive deal between China and Brazil. Brazil is the second largest exporter of corn in the world. They're now selling it to China for yuan. They're also doing that with soybeans. And for the United States soybean farmers, their sales are down about 60% this year because China is a big buyer of soybeans. They're now buying them from Brazil in local currencies. So keep in mind, there will be a gold-backed common settlement currency that the BRICS come out with probably next year in August. That's what we were told, that they were going to go back to the drawing board after the last August meeting, and the finance ministers were tasked with coming back with a plan to issue a common settlement currency that will be pegged to commodities, most likely gold. But in the meantime, they promised to trade with one another in local currencies, and that is exactly what you see happening. So this is nothing to shake a stick at. When you see the United Arab Emirates say, by the way, we're done taking dollars, it's massive. And it's even bigger when you realize that either later this week or early next week, they're going to have somewhere in the neighborhood of 60 or 70 countries coming to the United Arab Emirates to Dubai for this big environmental conference. I think it's interesting to note that the time that they're having half of the world come there for this meeting, they announced we're no longer taking dollars for oil. Little by little by little, chop, 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 chop. When's the? Don't know, but you can tell by something like this, we're getting much closer.
What do you think of today's episode? Do you agree with Andy Schectman and his theory of an imminent de-dollarization? Post in the comment sections down below your honest opinion and share this video with someone who hates commodities. Thank you for watching the video to the end. You're the backbone of our success, and we want to see you engaging with our community as your opinion matters to us. That's it for today, so I see you next time.